Hi friends, welcome back to our channel. If you are watching our channel first time, please subscribe. Now today we will complete entire concept, remaining concepts in Ind AS. In yesterday's class, like in Ind AS part 2 video, there are some doubts asking on NRV balancing, like while we increase the NRV, decrease the NRV, we need to reverse the in subsequent years. This is the explanation in the previous class. So there are doubts. There are few people asking doubts on this. So I will clarify in detail. Let's see. There are some retail business and corporate companies. The two set of separate accounting principles and all will follow for these guys. So first of all, we see in retail business. In retail business, what will be the formula? Opening stock plus purchases minus cost of goods sold is equal to closing stock. How this cost of goods sold will arrive? Sales minus profit or cost formula. I mean all materials supply and these are the options. So in this example, you can assume our opening stock is 100. Say you have purchases and all. So all these cost of goods sold and purchases, all the elements. Purchases are the 200. Say suppose your sales are 300, out of which sales profit is 50. So balance 250 is your sales. Okay. In the cost of conversion, the material cost, labor cost all will come 250. So you had 250 less here. So what would be their closing stock? 50. In this case, if you see the P&L account, your sales are 300 and your opening stock is 100, your purchases are 200, this is sales, and closing stock is 50. So what is the gross profit? 350, 350. So your gross profit is 50. In this situation, say this is year 1. In year 2, if the same stock is available in year 2 also, the question of reversal of NRV will come from the standard. Generally, in retail business, you cannot identify the same stock is stay there or not. So, in the second year also, you automatically calculate the same formula: opening stock plus purchases minus cost of goods for cost of goods sold is equal to closing stock. So this formula you will calculate every year. So you are automatically chasing your closing stock based on this. So this 50 uh, closing stock and the year dates. This closing stock is valued at cost. Then you see NRV now. For the 50 rupees of value of stock, is it NRV is 40 or 60? This is the question. This every year you see and you directly reduce here. Say suppose see two examples. The same 50, option 1, option 2. 1 year is 60 is the NRV, and the second year is in the same year second option is 40. In this situation, your P&L is 100. What are your purchases? Purchases are 200 and sales is 300. See, if his NRV is 60, what is our formula? Cost or NRV, whichever is lower. So cost is 50 as per our calculation. NRV is 60. So we need to see cost only. So in this case, same gross profit 50, 350, 350. So In the second case, if you observe in the second case, the same P&L 300 per opening stock purchases, these are sales. Now, if you see the NRV now, the cost is 50, the NRV is 40, whichever is lower. So 40 you add here. So what we will do? 340, 340, gross profit is 40. Here automatically this gross profit is changing while you reversing the NRV. In case in the second year, what is your opening stock? In the case 2, 40 is the opening stock. Again, sales would be the 100, sorry, purchase would be the 100, sales would be the 250. In this, the cost also there, I mean, profit also there. Now, you need to value closing stock. While doing the closing stock, you do the same formula and you compare with NRV and you will see whichever is lower, that you will add here. So automatically in the retail business, while using this formula, I mean opening plus purchases minus cost of goods sold is equal to say closing stock, while using this formula, this automatically adjusts. I mean, because you, if you are booking single entry system most of the retail business, this automatically adjusts. You don't need to reverse again and again and again. But this concept is different in terms of corporates. I will explain that corporates perspective. In the corporates, if you see this in the same P&L account, see this is how it will happen. There are some opening stock 100 and the purchases, in your example 200, and the sales 300. In closing stock also it will come based on the numbers you will hear, the consumption and all. While you enter the sales in the tally or software, whatever it is, you need to see which item you have sold, that has to enter here. So the closing stock coming automatically 50 based on your workings, right? That automatically in backend it will work. So this is how it happen in P&L account. Gross profit 50 the first year. The second year, assume that the same 50 value is still valued in the year 2 balance sheet also at the end of the year 2. In this situation, if you observe the opening stock, you could have reduced it to 50. So it means the opening stock for the next year is 50. The same 50 you have in the second case you have reduced to 40 because NRV is reduced to 40 in the second case. So your opening stock will come to 40 in the second year. Okay. Example, the same 40 is unsold in the second year. It is unsold, which is unsold. Then the question of reversal will come. If it is sold during the year, there is no closing stock. There is no question of reversal again. So if the same stock is available in the NRV, in the closing stock, then you need to check what is the NRV for the same material which is unsold in the previous year end and the same material in the current year end also. In this situation, if the NRV increases to 45 rupees, whereas your cost is 50, now in your books your cost is 40 only because you already written it off to previous year, right? So your cost is 40, showing revised cost. This is revised cost, and your NRV is 45. You need to increase your NRV is 45, your cost is 40. Whichever is lower, what will you show? 40 only. But earlier cost is 50. There is a return down because of the NRV calculation is 10. To the extent of this 10, you need to increase. I mean, you need to reverse this cost. Reverse this NRV, not cost. You need to reverse this NRV to the extent of previous reduction because your NRV is increased right now. So you need to see what is your NRV now 40 and what is your cost now 50. This is the first year scenario. Second year, what is your NRV 50? What is your NRV 45? There is an increase in the stock. So what is the value or value which is lower? 45 only. But in our books it is showing 40 only, right? So we need to increase this cost, increase this NRV, reverse this cost. I mean, closing stock will increase at the 5 rupees to other income, because earlier it has an expenditure as cost of goods sold. Now you need to remove cost of goods sold as a negative expenditure or other income. Generally, in Ind AS refers show it as a negative side of the cost of goods sold. I mean, in the purchases there will be cost of goods sold value selling the sales, right? In that you will reverse it, show it as a negative expenditure. This is how you have to see the NRV reversal while you calculating the problems in Ind AS 2. And there is also separate the remaining small concepts are there. We will wrap it up today. Disclosure requirements. See, we have completed these and these giant product and product. I will explain one problems after this class, but just revising after some time. While revising, I will explain the problems also. Now you see what is the accounting policy. You need to disclose all this. I mean, which method you are using, LIFO, PIFO, or weighted average. All these methods you have to use. And inventory classification. Inventory classification means raw material, work in progress, and finished goods. These classifications should be required. And expenditure and written down. If any expenses are written down, because if the raw material is reduced to uh, replacement based cost, or if finished goods are reduced to NRV, if the NRV is less than the cost, if work in progress, if the expected cost increases, you need to remove that from the sales account, and you need to revise the work in progress cost. All these expenses and return has to uh, shown in the disclosures. And also these inventory pledged. I mean, if you pledge to any item to any banks or any other vendors, you need to show in the disclosure part. You can read it on your own disclosure parts. And in AS2 versus in AS2, this is the not in syllabus, not in exam perspective, but I'm telling this for understanding also. In AS allows reversal of NRV written down. In AS we don't have this standard in previous AS. Now in India AS to specifically mention that you have to reverse the NRV if the cost, if the NRV is increases from the previous years. The same stock would be available in the current year also. Then in that case you need to reverse the NRV. And detailed guidelines and fair value. If NRV, if you want to calculate the NRV, you need to see the what is the fair value of the market, and you check the, I mean, selling expenditure, and then you will see NRV of this product. So for that from where you need to get this fair value and all is clearly given. And strict cost formula consistency. There are some formulas where how we have to account and all clearly given in the in the AS2. Instead of in AS2 there are there are very less disclosures, but in India AS2 they have given lot of disclosures now. And subsequently there are few more differences are there. Subsequent recognition. India has to deals with how we calculate inventory and subsequently also, like on the NRV or on the next year, if what happens about that NRV. This subsequent year one, year two, year three, all these subsequent years calculation also given. But in India is to there is no such. I mean, there is no such class in the in AS2. In India S2 they clearly given what is the net realizable value, what is the fair value in case of brokering traders, but there is no such concept in AS2. Okay, now we'll see few problems based on our understanding now. Then you will get the clarity about this Ind AS and you can solve the problems directly from exams perspective, exams point of view. So say suppose I will explain the question. Let me start. There is a opening stock in the question. The opening stock like finished goods and raw materials. The finished goods is 1000 kg. Raw materials are 1100 kg. So their cost is 25,000. All this is question only. This is not an answer. 11,000. And there are purchases during the year. 10,000 stock has been purchased. The value is 1 lakh. Okay. And the labor cost for this is 76,500. Okay. Overheads, that are fixed overheads, they clearly given in the question, that is 75,000. And then there are sales apart from it, there are sales, then sales are 2 lakhs 80,000. The same problem given in the institute material also. Now after this they given important information also. What they are given, there are the closing stock also. They give only numbers. Raw material 900 only available and the finished goods 1200 only available. Now we need to calculate this, I guess. Let me see what. And then the expected production of the year is 15,000 kilos. Okay, what is this? This is the expected production, which means expected production means this is the normal capacity, you can say. Due to fail, due to fall in the market demand, the selling price of the finished goods was 20 per kg and replacement cost of the raw material was 9.5. So the finished goods NRVs they have given. What is this NRVs? NRV of this raw material, finished goods NRV is 20. In raw material, you know, right? We can't say NRV. It is the replacement cost. The replacement cost is 9.5. What they are asking, calculate the closing inventory value. I mean, for this, what are the closing inventory for us? Raw material. There is no work in progress as of now, and finished goods. The quantity we know. Now we need to see how we need to value these values based on this question. See, you understand the question. This is the opening stock and there is raw material. All these are available. Now we need to calculate what is the NRV and what is the cost for these five items. So first we need to uh, take the cost of production and materials, everything. I hope you understand the question. I will explain the answer clearly. What is the cost of purchases and what is the cost of goods sold? You need to see the cost of production, right? If you want to compare this and that, I mean, first there is a stock of finished goods, and there is a stock of raw material, and there is a stock of closing stock. So if you see the formula, opening stock plus purchases minus sales is equal to your closing stock will come. What is your opening stock? They have given 1000 as given. Okay, 1000. How many raw material? How many goods you purchased? Again, 10,000 minus what is your sales? This you have to question because they didn't give any sales quantity. And what is your closing stock of finished goods? 1200, right? So if you calculate this, your sales would be uh, 1 lakh, sorry, 10,200, right? So cost of goods sold is 10,200. The purchase price 10,200 multiplied by 10 rupees each, because 10,000 and all, right? So 1 lakh 2,000 is your purchase price. And then direct labor. In the question they only given there is a direct labor, that is 76,500. And then they have given fixed overheads. Fixed overheads. You know the formula of fixed overheads. The cost is 75,000. Now you have to calculate the how much it will you will get for 10,200. The normal capacity, what is the normal capacity? 15k, or actual capacity 10,200. This is the actual production you have, but the normal capacity is this 75,000 for 15,000 units, but you have produced only 10,200. So balance you have to eliminate. How we have to eliminate? We have a formula for it. I explained the formula also in the previous classes, which is fixed cost 75,000 divided by actual production or normal production, whichever is higher. This is the 15,000. This was the year. So there some cost will come. What is the unit cost in this situation? 5 rupees. 5 rupees multiplied by 10,200, it will come 51,000 ever fixed overheads. There is no other cost. The total of this cost is 2,29,500. All this cost is for 10,200 units. So if you divided by this 2,59,29,000 by 10,200, no, the cost of your inventory is coming. The cost of the each product, cost of goods sold for each product is 22.5. In the question, they have given this NRV, and you have calculated cost 22.5, whichever is lower. So your cost of in the question, what is the finished goods? 1200 is the finished goods. NRV is the final value you have to calculate. So this is the finished goods cost, and you need to similarly you need to calculate raw materials cost. So if the finished goods are sold less than the cost, because 22.5 is less than the cost of the finished goods, right? Because NRV 20 is less than the 20.5, 22.5. So in this case, you need to calculate raw material on replacement cost, not on the original cost. What is your replacement cost? 9.5 they have given. So what is the stock? 900. 900 multiplied by 9.5, it is coming, this cost is coming 8,000, 24,000, and 900 multiplied by 9.5 is coming 8,500. The answer is 32,550. This is the final answer. So that is what they are asking. What is the cost of the inventory for 1200 to the 1200 closing stock and 900 work in progress. I hope you understand this question. If you see the institute material, most of the questions are like this only, because they include and everything, cost and all. We need to calculate like that. I am solving here only typical problems where you go the mistake. In this, they didn't give the closing stock number. That is why I calculated and explained to you. And weighted average, normal average, they have given all kind of problems. I will solve one more problem on this joint product and byproduct. That is the problem where students do the mistake in general. That I will clarify, and I will close this chapter after that question. Okay. See, in manufacturing process of A Limited, one byproduct emerged besides one main product, 1 and 2, apart from the scrap. Details of the cost and details are given. So, see, you understand this. Accordingly, I will explain. The question is on joint product and byproduct basis. So, now you will see they have given raw materials, wages, overheads, fixed and variable, and they have given closing stocks and the closing stock units also, and they given the numbers also, how many units they have output and what is the byproduct and all. They have given average market price for them, and also they sold some products and they get some profit also, that we need to see whether include or not. See, I will explain the question first and I will resolve the answer. First, they have given raw material. How much raw material? For 14,500 units. The cost for that is 1,50,000. Okay, the same problem as given in the institute material also. And there are some wages, 90,000. And also there are some fixed overheads, 65,000. And there are some variable overheads, those are 50,000. All these are given in the question, don't worry. And then there are some output, there is some output of 2 products and 1 byproduct. Say suppose product 1, product 2. Product 1, main product, this is main product 1 is 5,000 units we have produced, and second product we have produced 4,000 units. Okay, we have produced this, and there is a closing stock for the same, some part 1, part 2. There is a closing stock. This is also given in the question, 250 and 100. Okay, apart from these 2 products, there is one byproduct. It came, it will come in the production process. This byproduct cost, we didn't give, because these all costs are included for this, right? So this is byproduct, and also they have produced 2,000 byproducts. There is no closing stock in the byproduct. This for the main product 1 and product 2. Product 1 we can able to sell in the market for 60, and product 2 we can sell in the market for 50. Okay, and then the byproduct of this 2,000 has been sold in the market for 20 per unit. Okay, there is a profit by selling this product. We got a profit of 5,000. See, I already explained in the question. With this profit, what we need to do, I will explain the question, but you need to go to the concepts only while you doing these kind of problems, because if you miss the concept, your problem or your answer might be go wrong in the exam. So first read carefully about your question. Okay, this 5,000 profit what will I will tell you, because I already explained in the class. I'm telling the what we need to do. But after this line what they given, there is a profit by selling this product is 5,000 after incurring separate processing fee of charges of 8,000 and a packing charges of 2,000, and the balance 5,000 is after incurring these 10,000 expenditure, they got this 5,000 profit. Okay, that you put aside, and then 5,000 rupees was realized from sale of scrap. After this product, there would be some scrap also there, that they sold for 5,000. Some scrap also sold in the market. So now you have to calculate the inventory at the year end for these two items, for 200, 250 and 200 items. So this is the how question they frame. Now we need to calculate how the cost of these inventories. See here they clear by product deduct NRV from the main product. The byproduct in the byproduct. If it is a byproduct, I told you right. We need to deduct from the main product. Okay, that is one question. And second, joint cost is allocated on the basis of sales value, because all these are joint cost, right? First we need to add all those joints cost. The same question, say 1,50,000 we will add, 90,000 we will add, 65,000 we will add, 50,000 we will add, right? After this we need to see the joint product reversal. I mean, we need to deduct by joint product by in its NRV. In our concept, this is clearly solved, right? What is the joint product? 2,000 is the cost, and 20 per share you have unit, that is the 4,000, 40,000. In this calculation, we need to deduct the 10,000 extra cost. We need to spend this cost. This is 10,000 separately they mentioned, right? We need to processing cost and packing cost. We need to remove that processing cost and packing cost. 8k and 2k, total 10k. 30,000 is the net realizable value by selling this byproduct. Okay, for the 30,000 we could have some cost included by that was the 25,000, because the profit is 5,000. You can ignore these numbers. You just calculate the NRV for the calculation of main products inventory and remove that NRV into the main cost. What is your main cost? This is your main cost until now. 1,50,000, 90,000, 65,000, 50,000. How much you will get? 3,55,000 you get, I guess. 3,55,000, out of which you need to remove this. See, I'm calculating in the down. There is a raw material cost of 1,50,000 and the wages of 90,000 and the fixed overheads of 65,000. Variable overheads are 50,000 less NRV of byproduct. What is your NRV of byproduct? 30,000 we calculated. We need to remove 30,000 here. Again, one more point is that there is a sale of scrap. Sale of scrap is the 5,000. That is the separate line item in the question. So we need to remove that sale of scrap also. Then the total cost would be 3,20,000. C. Now you need to allocate the 3,20,000 to the main products, product 1 and product 2. They have given output of that product. I mean, 5,000 is the output, 4,000 was the output. Okay, and then the 60 is the market value and the 50 is the market value. If you multiply their sales value, it will coming to 2 lakhs and 3 lakhs. The ratio is 3:2. If you divide this 3,02,000 into 3:2 ratio, product 1 cost will come to 1,92,000. Product 2 cost will come to 1,28,000. So the cost of the each product, I mean, you add by 5,000, you add by 4,000, 4k and 5k. The cost of the product, this product will come to 38.4, and the cost of this product will come to 32. So now you know the cost. Obviously you are selling your product more than the your cost only, because the cost is 32, 38.4 and the selling price is 50 and 60, because in cost or NR whichever is lower. So this is the value you have to calculate for What is the closing stock they have given? First they have given, this is the 250 units is pending, and this is the 100 units is outstanding as on the year end date. So this multiplied by this and this multiplied by this will come to 9600 plus 3200. This is the product 1 closing stock, this is the product 2 closing stock. This is how you have to calculate. By this I can say we have completed this Ind AS 2. If you have any questions, you let me know in the comment section. I will answer the everything. See, for this kind of interested videos, you please subscribe our channel.